Thanks everybody for showing up tonight. Today is October 2nd. I hope you guys did not forget yesterday on October 1st, because you probably saw a lot of notices that said, FAFSA opens. It does. We'll talk about tonight, how quickly you do or do not need to, do FAFSA. The basic answer is you need to do it soon, but you don't need to kill yourself to do it tonight, tomorrow, or the next day. In fact, there might be a good reason why you might want to wait a little bit, because as Luanne will talk about, there are sometimes glitches, and particularly this month, the month of October this year, the studentaid.gov website has FAFSA traffic, which it always does, and in addition, it's going to have traffic for the student loan forgiveness plan, because applications open up this month as well. So we have no idea how that website's going to hold up. But anyhow, we will talk about that. And I'm going to turn it over to Luanne. Luanne and I have been doing this, I don't know how many years. I mean, definitely 4 years, maybe, longer. So Luanne's a wealth of information. She's going to talk about, FAFSA in general, and then walk through a lot of the screens that are most important to everybody. And we will try and answer as many questions as we can. So Luanne, why don't you give everybody a little background, and then if you want to share your slides or.
Yep, let me just go ahead and share my screen and welcome everybody to, gosh, the most fascinating webinar that you're going to be on forever. The FAFSA walkthrough, oh my gosh. But, for all of you that, hold on just a second, let me just make sure we're getting set up right. Okay, there we go. So the 23-24 FAFSA walkthrough. I'm gathering that the majority of you here have got seniors, and you're just roaring to get this thing started. We're going to be here a good hour, so hang in with us. Debbie's going to provide the replay, so that I'm going to try to go fast, because there is a lot of content, but you'll get the replay, and then you can stop and forward. I would suggest put it on, at least 1.5 times to go fast, and then slow it down when it comes to a spot that you need more information on. So we all agree the cost of college is pretty darn expensive. So why do we do the FAFSA as well as the CSS profile? We're not going to be talking about the CSS tonight. We're not going through a walkthrough on that, but just be aware that this is the time. And for those of you that will be applying to schools that take the CSS profile, what I do with my clients all the time is I do them back to back. I do it together, because that way all the financial data matches up. But both of these forms are here to help you from overpaying. So the FAFSA itself is not that difficult as long as you read the directions, which most of us do not. So who am I to give you this kind of advice? I've been doing this for over 15 years. I specialize in late stage college planning. Came into this world as a financial planner back in 1999, got to see how much education debt parents and students were taking on, and realized I could do a better job. I wouldn't have the stress of the market, especially these days, but I just, traded one stress for the other, because I think college planning is almost more stressful than the financial markets. But I can help families. If I can help a family from overpaying $100,000 unnecessarily, that's, by the time they get to retirement, maybe 20 years down the road, that could be like $500,000 sitting in the retirement. So why give it away to the college if you don't have to? So making college affordable one family at a time is my tagline. So let's get stuck into this. What's the elephant in the room right now is the FAFSA Simplification Act. It didn't happen So I've been on several webinars with the Department of Education this past week. I mean, poke myself in the eye, so boring, but we've got the data. And so the only changes that you need to be aware of for this year, forget all the other chatter that's going on about grandparent contributions aren't going to be, we're not going to be assessed on those, or divorced parents, or, all the things. The only changes, they've removed, are you a male or a female? They've removed the selective service question, removed the, drug conviction question. There's an incarcerated students form for those that are in jail. They can now qualify for financial need-based aid. The income threshold has gone from 27 to 29,000 for the automatic zero EFC. And the mobile app, which was such a big deal, it took them like 3 years of saying, it's coming, it's coming, it's coming. It was there for a year and now it's gone. So they've retired it. So those pretty much are the only things that you need to be concerned about for the FAFSA Simplification Act.
And Luanne, I'll just, actually, Luanne and I talked about this earlier this week, and we just talked about it before we got on tonight. We actually purposely aren't going in. I mean, there's been a lot of talk, as Luanne said, about what these changes are that are coming. We're not really going to talk about them tonight because they're not happening this year. So everybody that's on here who needs to fill out FAFSA, you will just confuse yourself if you try and, hear about what's maybe going to happen next year, as Luanne said, and she's been in on the meetings. They're not even sure it's really going to happen next year. So we know something's coming, but we're not going to get into details about it tonight because it's not worth the confusion.
It truly is not. There's 2 slides I'm going to be sharing at the end on the main thing that you need to be concerned about, as far as if they and when they eliminate the overlap students in college. That definitely needs to go into your planning, but we'll address that further on down the slides. So who should complete the FAFSA is, I've said it for years, even if you make Bill Gates kind of income, file the FAFSA. Because, your student can qualify for merit scholarships that some schools require the FAFSA or the CSS profile to be filed. I had a parent reach out to me just last week. Their $7,000 scholarship that their student got last year didn't show up. The students wanted to know why. Well, you didn't file the FAFSA or the CSS profile. So they're scrambling now to get it done. But, it's the only way a family can, their students can get the loans without a cosigner. It's the only way for if you are going to access the Parent Plus loans. And it could be just a great strategy, especially for those of you that are going to be helping your students with their grad school loans, which is going to be a lot more expensive than the undergrad loans. The reason you file a FAFSA is to find out where do you fit on the federal guidelines poverty level, so that they can see how much of our federal need-based aid are you going to qualify for. So will you qualify for a Pell Grant or a teacher education assistance grant, or the subsidized loans? Now, every student that files a FAFSA will be qualified no matter what your income. You can have a 7-figure income. They'll still qualify to have access to the federal student loans, but in the unsubsidized loan. Now, the federal Perkins loan is gone. I should have removed this slide and I didn't catch it right away. But also, if you're going to access the PLUS loans, but if your student is in that financial need category, they'll get offered work study. They still have to apply for it. But, so that is federal aid. And some of the aid comes in the form of loans. It's not all grants. So other reasons, life happens. My gosh, we just went through what, 2.5 years of COVID, where people lost their incomes, lost their businesses, medical expenses, you name it. Life changes on the blink of an eye. So file the FAFSA, because you don't know if you're going to need it later on. I hear a lot about, well, I'm going to take out loans for my student, but I'm going to pay the loans off before they graduate to help them establish credit. That does not establish credit for them. If they have graduated and then they start repaying, that's when the credit starts getting established. So, I just wanted to clear up that misinformation that flows around a lot. So another reason that we file the FAFSA, this may be the last year, it may not, but it's to get the expected family contribution, the EFC, that word that we hate and those initials that we hate, because for pretty much everybody says, well, it doesn't mean anything, doesn't matter. It does. We just don't like the numbers that come up with it, because it's going to take the parents' income and assets, student income and assets, calculate, the age of the oldest parent, how many are in your household, how many are in college at the same time, and they're going to come up with this calculation of this number that you don't know where it's coming from, to say that this is how much you need to spend before we, the federal government, are going to give you any financial need-based aid from the federal government. So just, that's the purpose of it. It's not coming from the schools, and the schools are taking that guideline, and now they're saying, okay, either your EFC, cost of attendance, minus the EFC equals need, and then it's going to be how much is it going to be in grants and how much is it going to be in loans. We'll be talking about the income and asset protection allowance here in a second, but it takes a lot of things into consideration. So this is the big one. I've been saying this for years as I've seen the asset protection allowance just shrinking and shrinking and shrinking. And now it's everybody has a zero. Last year was single parents, and those that were married filing jointly, might have had anywhere from 4,600 to 10,000, depending at 65 years old. Probably 12, 15 years ago when I started doing this, that 65 or older, the asset protection allowance was over $65,000. So that meant that whatever that figure was, you didn't have to disclose that. It wasn't assessed on the FAFSA. So now there is, it's just, it's zero for everybody. Your assets are assessed straight out 5.64%. And, that's for everyone. Now, the income protection allowance, and I took these right out of the EFC guide for 23-24. I'm a bit of a data geek. That's why I've done this for so long. But so here it's saying, all right, you got a family of 4 with one in college. We're going to protect the first $32,610 of your income. We're not going to assess it. And then it's going to get assessed on the dollar after that. And how does it get assessed? This is why we see so many parents in the group saying, how do they expect us to pay so much for this? Where did this number come from that my EFC is actually higher than what my income is because they take the income and the assets and calculate it all together between you, the parent, and the student. So it can be anywhere from 22 to 47% of your adjusted available income plus your assets. So that's why some of these figures are just so high. Now, the 23-24 cycle has, it used to be $27,000. If you earned $27,000 or less, then you would qualify for an EFC. It's bumped up to $29,000. Oh boy. That means that that family is definitely living on the poverty level. So they're, depending on their assets, it's virtually going to be a zero EFC if they don't have any assets. It does not mean that they're going to go to college for free. It's going to mean, how is the schools that you are looking at, how are they assessing that EFC? So you've got to be aware of that and aware of the schools. If they meet 100% of need, how much of that is going to be in grants and how much of it is going to be in loans, because loans are financial aid. So now we're going to get started into this walkthrough. Everything, as Debbie was saying earlier, the studentaid.gov site is going to be kind of like a perfect storm, because everything goes through the umbrella of that program, or of, you get your FSA ID, you file the FAFSA, the PLUS loans, the master promissory note, public service loan forgiveness. And so there's also, with public service loan forgiveness, there was a temporary PSLF, the Biden waiver, that expires on October 31st. And so there's thousands and thousands of people that are trying to get all of their information in before the 31st. The $10,000 and $20,000 loan forgiveness that we still don't even know that that's going to happen. The application is supposed to be released in another 2 weeks from this site. So if you have problems with the site crashing, it's just, you're just going to have to deal with it. The first 2 weeks usually are the worst, but I think it's going to get worse after that as well. I hope not. But, plan for the worst, hope for the best. So if you have not gotten an FSA ID as yet, that is your electronic signature. That's how you're going to file the electronic FAFSA. So one parent in the household gets the FSA ID, and each college student is going to have an FSA ID, because the FAFSA belongs to the student. And a lot of people, they confuse when they say, oh, I've got to create my own account. And they think it's the FAFSA account that the parent needs to have in addition to the student. It's the FSA ID. It's just your username and password for you to, eventually sign. So if you don't have that yet, you're just going to hit create account, and then make sure that all of your information is correct and accurate. Social security numbers, your date of birth, your given first, middle, and last name, not your, nicknames or such. Because this is going to Social Security. And so then Social Security is going to say, yes, this person is who they say they are. So you'll match the FSA ID with the information. So if there's any mistakes, it's going to wreak havoc. They're going to ask 4 challenge questions and answers. Write it down, because this is how you're going to, if you forget your password, because please write it down, your password, which is case sensitive, your username, your email address. Use your private email address. Don't use work emails. Don't use school accounts for your students. Use your personal, because this is going to stay with you for a long time, especially for those that are going to be getting loans. So write it all down. And this year they've come up with something new. There's going to be a backup code. And I'm assuming the backup code is going to be just another thing that they may ask you if you have gotten locked out of your FSA ID or locked out of your FAFSA account, sorry. So you're going to confirm and verify your mobile phone, your email, and the reason for that is it's going to make it easier if you get locked out. If you haven't done that, they'll then give you the opportunity to answer the challenge questions, and then it makes it easier to reset your password. So what documents do I need to start? And oh, by the way, it takes probably about 3 to 5 days for the Social Security to get back to you, sending you, hey, yes, everything's correct. You're confirmed and verified. So while you're doing that, just gather up your information, the documents that you're going to need for this year, for 23, 24. You're going to use the 21 tax return, just your federal. You don't need your state. All your financial documents, your bank statements, your brokerage accounts, your 529 accounts, the prepaid tuition. Contact the administrator and find out what is the balance. Savings bonds, find out what the balance is. You have to disclose a lot of these assets on the FAFSA. And here it is. It's all written out there for you as well. And if you aren't a US citizen, you're going to need your alien registration number as well. So tax year is what? 2021. It's always prior, but you're going to use the current asset accounts, the current balances. So prior tax return, current assets. So here we are. We've logged into studentaid.gov, and you've got 3 choices. I'm a student, I'm a parent, I'm a preparer. I am just going to give you my honest opinion. You log in as the student. Have the student sit down beside you and do this together. It is the easiest way to do it, because just logging in as the, I mean, what 17-year-old do you want to give this responsibility to? When I get calls from, so many parents every year, I made a mistake. I can't figure this out. This is so overwhelming. If it's overwhelming for parents, why would the government ever think that it's okay for a student to do this on their own? So that's my opinion. Log in as the student with your student and start to go through the process. The biggest thing is to remember this is the student's account. The FAFSA belongs to the student. The parent does not have a FAFSA account. This is one of the times when I say, okay, you can skim this, because if you don't accept it, you're not going to be able to go forward and file electronically. So you're just saying, hey, I'm going to be truthful and honest. So you accept. So here we are. So we're in Harvey's account, and it's saying, hey, Harvey, we didn't find the 23-24 FAFSA on form on file for you, but we see you had a 22. Do you want to renew? So those of you that have maybe had a senior last year, and they're a freshman in college this year, you can renew their FAFSA form. And it saves you that time of inputting all of that information. And you notice there's 2 years. Make sure that you're logging in to 23-24 for this next school year. Now, let's say that this is the first time. So Maxine is now, we're going to start the 23-24 FAFSA form. You see down in the left corner, the FSA ID matched. If it doesn't match, you're not going anywhere. And the save key. Please keep it simple. For every family that I work with, the save key is the student's first name, all lowercase. It's very easy not to forget. And if your student logs in, so let's just say that they logged in at high school, because that's the big thing these days. Oh, we're going to help our students get started with the FAFSA. I wouldn't let my student do that, but it's up to you. They create a save key. They're not paying any attention. And then of course they forget what they did because they named it something odd. So try to keep it as simple as possible. And oh my goodness, here's resources and instructions that you can, click on these, drop down and get all sorts of resources and help. All righty. Once again, the FAFSA is for the student. Make sure that their information is all correct. Student's email and phone number. Don't use the school email. Their address, student residency. They're just confirming for in-state tuition. Now, what will your college grade level be? A lot of families get kind of a little bit confused with this one, especially if the kids have gone in to do it. Oh, geez, I've taken dual enrollment classes in AP. I've got at least 1 year of college. It doesn't work that way. So it's never attended college first year. And I always say yes for work study, although if you don't qualify for financial need-based aid, it's not going to get offered. But you never know when things change. Driver's license doesn't have to be, it's not necessary. You can input it if you want. I'm pointing to the arrow or the question mark at the end of every question. So this one is, where you were foster youth, and on this page, highest high school, what's the highest school completed by parent 1 and 2. So when you click on the question mark, it opens up, instructions. And, this is where you'll find that information that you're looking for. Now, as far as the highest school your parent completed, a lot of parents say, well, geez, I never finished. And is this going to look bad on my kid? Should I just go ahead and say that I finished? It's a question for state scholarship. It's not going to look bad on your child. In fact, if both parents never completed either community college or completed their bachelor's, that could work out for your student as being the first student in the family that is going off to higher education. So it could be a positive thing. The biggest thing is don't fudge, don't lie, just answer honestly. So here we're talking about the high school. So we're gonna, it's pretty self-explanatory. Then you put the high school name in here, search for it. If it doesn't come up, then you can add it manually, especially those of you that are doing homeschooling. You're going to, if you're in a homeschool program or such, or just homeschool, you're going to manually input that. So just make sure that the high school information is correct. And we come to the college search page. So you can input up to 10 colleges at a time. And I don't know, quite honestly, how this is followed, but if your child is going to be applying to a state flagship university in your state, you should always have that as the first entry. Now, colleges do not see your list of colleges anymore, but they say that that oftentimes has something to do with state aid. So that's my recommendation if your child is going to be applying for schools in your state, to add those state schools first. Now, if you've got more than 10 colleges, what I've always done is once the FAFSA has been submitted, about 3 to 5 days later, your student, not you, the parent gets nothing. Your student is going to get an email with their SAR, the student aid report, that's going to say, here's your EFC, and here, all of your information has been, sent to the colleges. So then you can go back into the FAFSA and delete those colleges and add the rest of the schools that are on their list. So you're going to go ahead and, state in the name of the school, do a search. And I use University of Maryland for a reason, because there's a lot of University of Maryland. Make sure that you choose the right school. Penn State, the SUNYs, the UCs, Florida State and University of Florida, they all sound a lot alike. So make sure that you're choosing the right school. You'll have the information here that talks about the in-state and out-of-state tuition and such. I find this information is not often up to date. So you're better off going to the school's website.
It's probably, I'm going to guess, Luanne, it's probably over 1.5 years old, because
Yep.
they pull it from iPads, and iPads has like an 18-month lag.
Correct. I've never found it accurate. So it's just going to give you a ballpark. Go to the school's website to get the accurate data. So we're back into the student and marital status. Just remember, there are adult students that are also filing the FAFSA. So they're going to ask for marital status, dependents, do they have other dependents and such. So now we get to the student's dependency question. So if they're going to answer to none of the above, then they are going to be what? Considered a dependent student. If they're under the age of 24, they've not graduated with an undergrad. If they've never been in the military, they don't have dependents of their own, they're going to be a dependent student. It has nothing to do with dependency on your tax return. So this is completely different. And there's a great infographic on the FAFSA site about who's my parent when I fill out the FAFSA. This starts to get confusing when there are, divorced families and separations and such. So whose information should I provide is right there in the information on the FAFSA. So my parents live together, whether they're married or unmarried. If they're unmarried, they live together in the same household as you. They both are filing on the FAFSA. My parents are divorced or separated, and I live with one parent more than the other. Currently, right now, without the changes, whoever the student lives with more than 51% of the time is going to be the parent that is going to file the FAFSA and use their financial information. My parents are divorced or separated, and I live with both parents equally. Well, okay. So I know that there's sometimes headbutts and, it's exactly 50%, and I'm not going to give you an extra day or whatever. If that's going to be the case, then whichever parent provides the most financial support. But I want to stress that those of you that have remarried, the household information is who lives in the household. So if you have remarried, you're the new step parent, no matter if they have their own kids from their other marriage and they're helping to pay for their biological children, they're not going to be helping you pay for your biological children. It doesn't matter. They still live in the household, so their income and assets, and they're going to be on the FAFSA as a parent. So that's always one that trips people up a lot. Now, let's just say that your student that you're helping through this, they're homeless, or they can answer yes to any of these questions. And so what happens is they are now an independent student and they do not have to answer questions about their parents. You know, they could have a parent who's incarcerated and their other parent passed away. They're living with, you know, a guardian or such. So it's there to help those students, but just don't think that they're going to get a ton of financial aid. It's not going to be much more than what a dependent student is going to get. And then you have to look at the schools that they're applying to. So now we're in the parent status. So you can see here, parent demographics. It's right there for you so that you don't get mixed up. And it's always the FAFSA belongs to the student. Now, marital status of your parents. Are they married or remarried? They want to know the date. So if you've remarried, it's not your original date with the biological parent. It's your remarried date with the new step parent. If you divorced, and I've found this kind of interesting over the years, most of my families that, you know, have gone through divorce, they never remember the month and year, which I would think that they would, but I've never been divorced. So I just find it interesting. So this is a new slide this year. Enter information for your first parent highlighted. So what I do, whichever parent has got the FSA ID, it's always for me the first parent on the FAFSA. So I know when it comes time to the submission and such, everything, I don't have to second guess, oh, which parent was the first one. So you're going to put the other parent's information in there. Once again, legal residence. Now, how many dependents do your parents have? So dependent children, this is, once again, has got nothing to do with your tax returns. So if you're in a blended family and your stepchildren come over every other weekend and your kids go to visit their parent every other weekend, you know, you both can claim. However, if you're giving more than half of their financial support, you're able to say that, okay, instead of in our household, we only have, say, 2 children, but every other weekend we've got 5. You can keep those, add those other 3 children as your dependents. Now, how many other dependents do your parents have? This is not siblings or children, but let's say a grandparent is living with them, or you know, in a brother or whatever. They don't have to be on your tax return, but just remember that you may be asked for documentation and verification of these figures. So don't just say that you've got 10 cousins living with you when you don't. So now the household size. There's you, the student, your parents, even though I'm talking mostly to parents right now, and any other dependent children of your parents. So then it's how many are in college. So you don't, if mom or dad are attending college at night or such, you are not added to this. But let's just say you've got twins or triplets, or you know, an older child that's in college, you're going to have 2. A lot of people miss this one because they figure my high school student isn't in college yet. They're factoring in that this is going to be the year that they're in college. So right now, technically, they're in college as far as the FAFSA is concerned. So don't, excuse me, don't forget your high school student who is a senior. Tax filing, you're going to, now they're asking, since it's a dependent student, we're going to get your parents' 2021 tax return information. And here we come to the slide that I love to hate and talk about is the data retrieval tool, or the DRT. So is it simple? Is it fast? Is it easy? Yes, 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 until it makes a glitch. And then it's none of the above. So look at what I've got here. For your protection, we will not display on the IRS website your personal information or on the FAFSA form. So when they transfer, the data retrieval tool is mainly, it heads out to the IRS and you input your information. The IRS is going to transfer your documentation on your 1040 over to the FAFSA, except it's going to say transferred by the IRS. You don't see the data. You don't see any numbers. Do you trust the IRS and the Department of Education? I personally do not. There's too many glitches. You want to know, especially your first submission as a first year in college. So they give you the opportunity to skip it and complete it manually or proceed to the IRS. I'm going to show you both, but you already know what I feel about it. So if you're going to use the DRT, then the parent, which should hopefully be parent number one, if you want to stay within a system, then you're going to put the FSA ID, username and password, and once again, skip IRS and complete manually or go to the IRS. This is a infographic that tells you exactly how to do it. I mean, it's super simple. The biggest problem is you have to look at the information on your tax return, how your name is spelled, how your street is spelled, your town, your zip code. If there's any error on your tax return, you have to put that error on the information page for the DRT. Otherwise, it's not going to work. Now, if you're somebody who has amended your tax return, or your account has been flagged for tax fraud because somebody got your social security number and you can't do an electronic tax, you're not going to be able to use the DRT. So, and if you, a lot of business people will go ahead and wait until, September to do their tax return. It takes a long time right now with the IRS. So if your tax return hasn't been done very recently, you're not going to be able to use the DRT as well.
So,
Now,
Luanne, quick question.
yes.
What if you use the DRT in a previous year and you don't want to use it
Then you
in the
don't have to
following?
use it.
So it's a year by year decision.
Correct. So to be quite honest, when, for all of my families, the first year, I don't use the DRT. I manually input, and we'll go through these screens right now. It's what we used to do, before the DRT anyways. But then as long as nothing's changed, there's nothing strange, they're not going to receive any kind of financial need-based aid. The next year is, if they're fine, I just use the DRT. So it's not that I never use it, but I don't like to use it for first year, especially if there's anything strange like a rollover or such, which we'll get into here. So you'll see here, it tells you exactly what lines to go on your tax return to get the information that they're asking. Exactly, what's your income tax for 2021? It tells you the exact line to go to. And then click on the question mark and it shows you exactly which one. A lot of families use 24, line 24. What is your total tax? They want line 22. They don't care what's on 24. Just follow the directions. Now, if you see the red arrow where it says exclude rollovers. So if you had a rollover, a lot of people do when they change jobs and such, then you're not going to input that rollover. Now, if you took a 401k distribution and received those funds and paid the taxes, it's already included in your tax return. So just be aware of that difference. And this is to show you that I got booted off of the FAFSA demo site 3 times while I was doing this. And so if you do get booted off while you're trying to do your FAFSA, thank you for your patience, return to the FAFSA page, and hopefully your information is going to have been saved. Now, back to the parent information. There's going to be 2 screens here. One is, and you're going to have to put this on here regardless if you do the DRT or not. So if you paid child support, and then the next screen is if you received child support, because currently, right now, child support, even though it's not on the tax return, is considered untaxed income for FAFSA. The same with payments to tax-deferred pension and qualified retirement savings plans. So you're going to look for on your W-2, box 12, could be anywhere from A through D, and look at the codes. And just you're going to have to input what you contributed for the year to your qualified retirement accounts. Now, don't use code DD because that's your employer benefits. And I've seen so many families that have used that and added it, and then it overstates their EFC. You're going to have to input this whether you use the DRT or not. And then any untaxed portions of HSAs, health savings accounts, FSAs, you're going to, anything that was deferred from your income from your employer, the FAFSA, the government wants to know what was your total income. They don't care that you're deferring those taxes, but don't overstate. So be aware of, you don't include untaxed Social Security benefits or supplemental security income or, military housing allowance and such. So, always go to those little question marks at the end of the question to find out exactly what they're looking for. So here we are, parent assets. Once again, this was my first indication. I thought, ooh, it's a 0 asset protection. And sure enough, it was. So if you have assets, you hopefully you do, because you're going to have to try to help pay for college. You're going to click yes here. Now, we're going to go into this in detail. The assets to include is, your checking, savings account, that's like in cash. I've seen people say, well, I'm just going to pull my money out and put it under my mattress or put it into a safe deposit box or such. You still have to disclose it. Don't get caught, not disclosing what you have to disclose. There's fines, there's jail time. So it's not worth it. So money in cash and savings, like CDs are going to count in that. Money market account is going to count in that cash, checking, and savings. Anything else, like your 529 accounts for your student, and that's in all children in your family. It's a parent investment account. So it's going to go under the investments, along with any of your stock brokerage accounts, mutual funds, anything that is non-qualified retirement. Now, if you consider monies that you've got in a stock account and in a mutual fund or such, you consider that your retirement, but it's not qualified. It's not tax deferred. It's not a retirement account as far as the FAFSA is concerned. It's considered an investment. So just be aware of the changes, the differences. Stocks, savings bonds, they want everything. Now, the assets that you do not include is the equity in your home, your primary residence. If you have a rental real estate property, that's under investments. It is, but you do not include the equity in your primary residence. If you've got cash value in life insurance, that is not an asset that needs to be disclosed. ABLE accounts for those of you with disabled children, those are not disclosed. Qualified retirement account balances, your 401ks, 457s, 403bs, pensions, annuities, your traditional IRAs, your Roth IRAs, none of those balances are disclosed. You're going to disclose your annual contribution to those deferred qualified retirement accounts as untaxed income, but you do not disclose these accounts as an asset. So just make sure that you really pay attention to that so that you don't over disclose and end up having a much higher expected family contribution than is necessary.
Luanne, do you mind, you don't have to go back, but there's a few questions about if a parent owns a joint account, one question, a joint account with a student, and one if they own a joint account with a grandparent.
Okay, so it gets into a gray area there. So if your name is on your student's account because your bank says a parent has to be on there, you're not using that account. It's going to count as the student, under the student's assets. If you've got younger children and, same thing, savings account. But if you've got a uniform trust for minors account or a uniform gift for minors account because your CPA said, oh, do this, and you pay kitty tax on the earnings instead of your tax rate, you just inflated your EFC substantially because that UGMA or UTMA account, it's not going to count as a parent asset. It's going to count as a student asset. And the student's assets are assessed at 20% for the FAFSA. It's only at 5.64% for the parent. Now, when your name is on a parent account because it's there for an emergency, you just have to make sure that your social security number is not tied to that account. If it is, then technically you're supposed to disclose it. So I hope that answers that. So here you have the asset page. Now, as it stands right now, you do not have to disclose your business assets if it's a family-owned business, you own it with a family member more than 50%, and you have fewer than 100 employees. That's going to go away eventually. But for right now, you do not have to disclose your business assets in that regard. Now, if you have non-family partners and you have more than 100 employees, then you disclose your portion of the assets. And it just gets really technical and complicated. Now, so now we're at the student filing, and they didn't file a tax return, so they're not going to use the data retrieval tool.
Sorry, go ahead, Luanne.
You got it. Okay. So sorry, folks. Keep your phones muted if you can. So the student tax filing, if they filed a tax return, you can use the DRT. If they didn't, there's no big deal. But if they earned income, whether it's $100 or $2,500, you know, there's oh gosh, what is it? I think it's $12,000 that they can earn and not have to declare a tax return. I don't know if that's changed. I haven't looked at it for this year. But so if they don't have to file a tax return, but you still want to put their income, especially if they got a W-2 or 1099 or such. Once again, they're going to be asked the same questions as far as child support and retirement, other untaxed income, student assets. This is accurate. They want accurate figures. So if your child has got $11.43, then they have $11 in their checking or savings account. If they've got $52.75, you round up to $53. It is a kind of a red flag to put zero or to put even, you know, $100, $1,000, whatever. So just make sure that it's accurate and it's current. And that goes for the parent assets as well. They don't want to estimate. They want to know what is the value in your account as today as you're filing for all of your accounts. So we've kind of gotten to the end, but you're not done yet. So this is going to be your FAFSA summary. And I didn't print out the whole thing because it would go on for slides. But you want to scroll down the information, make sure that it's all correct. You'll get down to the bottom and this page. I always print it and save it to a PDF. If you like paper, print it off. But this way you've got some documentation as far as what your figures are. And, you know, once again, when you're going to file the FAFSA, you're going to have to put your FSA ID, the parent, because in this indication, we started the filing as the student. So we've already put their FSA ID, username and password in here. Now, if you remember back at the beginning, I said the things that changed with the FAFSA Simplification Act, the only things that changed were they weren't asking the sex questions, but yet here we are at the end, and it's asking, what is your gender? And you can decline to answer, you can answer. Why they're saying one thing and now this happens, it says it doesn't have an impact on your eligibility. So same thing with ethnicity and race. So we're almost to the end. Application was saved. Maxine was the student. I'm ready to submit. And remember, we filed the FAFSA with or signed in with Maxine as a student, so it automatically signs. Now, parent signature is needed. Which parent are you? Remember, if you're parent 1 or 2, you're going to agree to the same thing. If you don't, it's not going to file. So I'm, just a realistic person. Enter the parent's FSA username and password, sign and submit the FAFSA. Now, if you don't, they give you some options. You can sign with the FSA ID. If you don't have the FSA ID, you can print a signature page, sign it, and mail it. Or you can submit without signatures and go and get your FSA ID. Maybe there's some mix up with Social Security or such. I would say try to stay away from these 2 options as much as possible. So get your FSA ID squared away and sign electronically. Once again, now we're signing and submitting, and we get to this form, this page. Do not close this. Everybody closes it, and then they get on the Road to College or Paying for College Facebook page, I didn't get my EFC. It's right here. It's just, it starts with zeros unless your EFC is in a 6-digit figure. So they have a different problem than you do. But so you're going to find, I don't have an EFC on this because it was a demo site. But you're going to see right over here, it's going to share what the EFC was or just below it. I haven't seen if they've changed it yet for this year, because this screen will open up. You want to expand the screen, print it to the PDF. This tells you what your EFC is, but it also gives you the data release number so that if you have to call FAFSA, the FAFSA hotline, as I call it, they're going to ask you for the data release number in addition to information about the student and such. So don't skip this page. So if it shows 0025359, it's 25,359 is the EFC. So this future changes, we're not going to go into detail. You can read it when you get the replay. But these were the changes that we expected this year. So we don't know if it's going to happen next year or the year after. The one thing that you do need to be aware of is the no discount for siblings enrolled in college simultaneously. I don't think that they're listening to any of us that are trying to tell them that they're making a huge mistake for the middle American families. So I want to share with you a couple of examples of what that means. So this is an average family. They've got 2 children in college, their adjusted gross income, their assets, and whatnot. Student is looking at going to Boston University. So with 2 kids in college, their federal EFC is 31,000. Their institutional EFC, which is what Boston would use because they're a CSS profile school, that's what institutional EFC means. Then that is the EFC that the school is going to use. So this consensus EFC is just, there's a group of schools that they call themselves the consensus schools, and they calculate financial aid a little bit differently. This first year college pre-approval up in the corner, that means that is what this family, the parents have said, this is what we know that we're paying, contributing each year. That's their college pre-approval. So we come on down here to the need-based grants. So with this example, this family's going to get about $160,000 of grants, which is pretty good. It's still going to be, they're going to come up with $130,000, whether it's in loans or other sources, with a monthly annual or a monthly repayment in the 10-year standard repayment plan of $1,428. That's pretty steep. Especially if you're expecting your student to pay that. Now, this 3583 over in the right corner, that's the average that my software gives for 1, 5, and 10-year graduates from BU that were business majors. So let's remember this figure, because the next screen, you're going to be grabbing for your glass of wine or your beer right next to you. So here we have 1 child in college. And now all of a sudden, the EFC goes 57,000 for the federal, 69,000 for the institutional. The grants have dropped down to maybe 80,000. And the cost of attendance has increased dramatically. Now, if the student attends, then that 10-year standard monthly repayment jumps up to $2,400 a month. They're making still $35.83 take home. We don't know what's going to happen with schools that we already have children in college when they decide that we're no longer going to have the reduced EFC with more than one child in college. So my concern is you need to look at this very closely if you're going to lose that EFC break with multiple, if that's what you're planning on to be able to get your kids into some of these schools because of the grant aid, look at it without 2 children or more in college. Now, this particular student was also, I'm in Virginia, and this is kind of a made up case, but close to it. So they're looking at James Madison as well. Now, the EFC didn't change, although JMU doesn't use the CSS profile. They only use the EFC from the FAFSA. There are no grants, there are no merit, and there wasn't any merit on the other 2 slides either. It was just grant aid. But because the school is so much less over the 4 years, it's a dramatic savings in the loans that mom and dad and the student would be taking. The payment, the monthly standard 10-year repayment, could be managed for a student that's making just over $3,300 in take home. And if you noticed, it's only a $200 difference between the students that graduated from BU to the JMU student as far as take home. So choose wisely, especially those of you that have more than one child. We don't know, and the colleges won't give you an answer either. We can't get anybody to step up and say what they're going to do. I think private schools are going to have a lot more discretion because it's their money, but state schools, absolutely not. So, and for those of you that are so concerned that, okay, I have to use my 2021 tax return, and I made a heck of a lot more money than I did in 2022 because I had a lot of overtime from, because of COVID or whatever the case is. You still, even if you waited to file your FAFSA until January or February of 23, you're still going to have to use the 21 tax return. It's just a given. But I'll share with you this example here. So this is George Washington University. These folks were referred to me by one of my clients, and they couldn't figure out why she was paying so less for her student going to BU, and they were paying full. Well, for one, they never filed the FAFSA. They never filed the CSS profile. They were told by some of their, co-workers and friends, don't bother, you're not going to get anything. We don't get anything, but we do in a sense. So I filed their FAFSA, filed their CSS profile. Their income had dropped substantially because of COVID. They had a dental practice, have a dental practice. And, it was basically the doors were shut. They actually went to a negative AGI. I think they had a pretty good CPA as well. So we had to file for using their prior tax return, but then immediately got the CPA in January to get their current tax return, submitted a professional judgment financial aid appeal. And as you can see here, their institutional methodology was at 66,000. because their income was, it was on their tax return, it was over 250. But with a negative 68,000 adjusted gross income, their FAFSA was $303. Now the CSS profile is at almost 16,000 because they had equity in their home. They have since had to sell their home and have no equity. So before, where the student was receiving no grants, nothing, now $16,000 in scholarships from the school, was able to qualify for the Pell Grant, $6,500. The Pell Grant is now $68.45, I think it is, and got institutional grants. So they got, virtually almost, $30,000, and instead of paying $75,000, they paid $48,000. So it's not, if you're panicking because your income is so substantially different, you can submit financial aid appeal, professional judgment. Every school is going to call it different. And then you've got to work at it. So you can't see it, but this date was September 26th. The date on the previous, you can't see it, it was January of 2022. So not only the estimated cost of attendance went from 70,000 in January of 22 to 76,000 in September of 22. So make sure that you take into account the increases in cost of attendance while you're making all of your decisions. So there's a wealth of resources out there. Studentaid.gov, there's a Facebook page. YouTube has got a ton of information. Twitter, I don't tweet, so I don't know what's on there, but I will warn you. So the 800 number for FAFSA hotline is what I called it for years. You can call them, but just be aware that you might want to call back again and see if you're going to get the same answer more than once. And if it takes 3 or 4 times to call to get 2 answers in a row, you want to do that. Just document what the information that you're getting, because oftentimes you're getting somebody who just doesn't care about their job and they don't care about the information that they're giving you. This is the same thing that happened with all the loan servicers with the PSLF. They just didn't care. It was a job. So Debbie,
Sure.
over to you.
Yeah, I mean, you can continue. We're going to go through a lot of the questions that are here. We'll try and get to them as many as possible. We do offer with Luanne what we call a FAFSA review service. Honestly, this is not for everyone. If you have pretty straightforward situation, obviously, if you're going to use the DRT, or if you just don't have any complications, then you don't need help. Actually, the FAFSA will be probably pretty easy, and it should take you 30 minutes and nothing to worry about. But if you have a situation where you're not quite sure what information to include, or if you just want somebody to look it over, we partnered with Luanne, and we've been doing for the past few years what we call, a FAFSA review, and you will fill out your FAFSA in a paper format, which we have, and then Luanne will walk through it just to make sure that you haven't made any mistakes. And people do make mistakes. I know, Luanne, you probably have tons of stories of families just in the past few years who've done the review, thought that everything was okay, but you found stuff. And in the best of cases, there are definitely times where people submitted and it's fine, but then it's just a peace of mind that they know that they did it correctly. So we offer it. It's really, it's completely up to you whether you feel it's necessary. Again, for some people, it truly will not be necessary. But for others, if you have a more complicated situation, you just might want, somebody with professional eyes to look over what you're doing. Okay, so Luanne, I'm going to scroll back and start from the beginning with some of the questions that we had that either I didn't answer or you didn't answer in your
Okay.
slides. Okay.
Hour and 20 minutes.
I know. I thought that was very good, Luann. And you've definitely gotten concise in a good way. Okay, so I'm starting from the beginning again. We'll try and get to as many questions as we can. So this person is saying that they're a widow, but they live with their boyfriend and their boyfriend's son. Do they count? Do they count as dependents?
If you are providing, 50% of their, not their income, but their support, you can put them as once again, it's not a dependent on your tax return, but it's a dependent member of your household. Now, you do not disclose your boyfriend's income and assets because you're living together. If you're married, yes, but if you're living together, you don't have to. So it just depends. If you can honestly say that you are, if it's a 50-50 split and you guys are doing, then I would not put them down as additional members of your household.
Okay. Next question. You kind of addressed it, but maybe we can say a tiny bit more. If you're earning significantly less, well, actually, we didn't really address this situation. If you're earning less income now in 2022 compared to your tax return of 2021, how do you tell the college? Is there a way for the colleges to know that, and how would they know that?
So you file with 2021. You get your 2022 taxes done ASAP, and then you find out for the school, how do they want to receive that information? Typically, it's a professional judgment form or a change in circumstances form. You're not going to send them your tax return until they've asked you to, but you're going to submit an appeal form and state what the changes were, why there was such a dramatic change. And then it's up to the school on how they're going to address that. So as you saw with the example that I gave, it took a long time before it finally came together. Now that was for George Washington University. Their daughter is going to be attending NYU, and they are not cooperating at all. So it depends on the school too.
And that's actually something we address, honestly, starting in like January, February, March timeframe, when you get students start getting their acceptances and the financial aid offer. It's basically called the financial aid appeal. And, we'll walk through the steps about how you do it then. But just know that there is a process that you can go through to let the colleges know that there's a discrepancy between your current income. And it's got to be somewhat, there's like a percentage, that you want to kind of look at.
It's got to be pretty substantial.
Yeah.
It's not, okay, I was out of work for 2 months. It's like 6 months or longer.
Right.
So.
And then there are other reasons why your total income, you might have more medical expenses, but that's something we'll go through, honestly, starting in January.
Just think about all the people in Florida right now.
Yep, that will count, unfortunately.
Oh my God, yeah.
Okay, so let's see. What if you do not file taxes because you're on disability? And you get disability income.
That's
yep. Go ahead.
That's fine. You're just going to answer the questions. And I've done a FAFSA for a few people that are in that situation. They don't have to file taxes. So it's just, there's a spot there. I know it's on one of the slides. So it's, you're going to qualify unless your assets are off the charts. You're going to qualify for usually the zero EFC, or maybe not. It depends on how much Social Security disability income you're receiving. If it's over that 29,000, then you are going to have, a few dollars of EFC.
Okay. What if you haven't filed your 2021 taxes? What should you be doing?
You need to get them filed.
Okay, yeah, because somebody asked, can I use 2021 numbers? No, sorry, 20. So can I use 2020 numbers? No, you can't.
No, you need to get your taxes filed.
Okay, here's an interesting question. Somebody owns a home and half of the home is rental and half of it is our space, is where they live. Do I enter, what do they enter in terms of what part of the house might be considered investment?
I mean, is this just a temporary thing or is this constant?
It sounds like it's constant.
Yeah. I mean, technically, I guess, see, folks, even I get questions that I've never come across. I learn something new every single day. I would think that because they're going to declare the income as rental income. So if it's exactly, 50-50, probably the same way that you might split it up for your taxes, do the same thing for the equity in your home. And then half of the equity would be, so remember, it's your, if you've got a mortgage, you will subtract that as well to come up with your equity.
There were a lot of questions on this, but I'll just use this one example. I think we'll cover it. So if this person's saying, if I have one child who's starting college and the other one's in grad school, how do they file FAFSA? I think the same thing extends to, somewhat extends a variation of it if I've got two students in college and I have to handle two FAFSAs.
So the student in grad school, they're doing their own FAFSA. You are not on that FAFSA as the parent. Now, there are some schools, some med schools that are asking for parent information now, although they're still not, coming up with an EFC on the parents' financials. I think they just want to make sure that, that there's going to be a chain to find somebody in the event that all of a sudden they disappear. But if the grad student is no longer your dependent student, then you're not going to count them on your the FAFSA for your high school student.
And for the families that have two students in college at the same time, how many FAFSA IDs are they going to have, and how many FAFSAs are they going to fill out?
Each student, the FAFSA is the student. So each student has their own individual FAFSA. They each have their own individual FSA ID because it's tied to their social security number. So it's individual. So for one student, you do the FAFSA, and then you're going to do another one for the other student. And there's only one parent FSA ID for both students.
Okay. And maybe just to repeat it, Luanne, just mention the website again where people go to.
Studentaid.gov.
Okay, just scrolling through because we answered a lot of these questions. Okay, do we match the name on the social security card or the student's transcript? What if they're different?
It's the social security card. So I just had a student who changed his name in the midst of all of this. So we had to make sure that his name was corrected with Social Security to then change his FSA ID. So you're going to have to change the name, his, I don't know if the school has got it wrong or if there's been a name change, but you got to notify the school to have the same name on the transcript, because it's just going to end up being a domino effect of he's going to graduate from college and have the wrong name on his on his degree.
So there were a lot of questions about Roths, 401k Roths. So maybe just reiterate what type of assets are not included in as FAF or not counted as FAFSA assets.
So qualified retirement accounts, 401ks, 403bs, 401k Roths, Roth IRAs, traditional IRAs, anything that's a qualified retirement account. So sometimes annuities, because you did a rollover, that's a qualified because it's still an IRA. What the difference is with the Roth is that you've already paid taxes on that from your income. So it's not tax deferred contributions. So when it comes time to input your untaxed income, you're going to, whatever your contributions were in that year for the 401k, 403b, not a Roth IRA, not a Roth 401k, but everything else gets counted as untaxed income.
So the contributions to the Roth don't get added back in, but the Roth as an asset is not counted, as a FAFSA asset.
Correct. Now, when it comes to the CSS profile, you're going to have to disclose all of that.
Somebody asked, they said they've already started their account, but they want to start over. Can they delete the account and start over?
If you didn't submit, then you just go in and change the information. If you've already submitted, you can't go in and change it, unless, especially if you use the data retrieval tool. If you didn't use the data retrieval tool, then you can go in and amend your FAFSA, and then you'll have to resubmit it to the colleges. But if you have used the data retrieval tool and submitted, you can't change any of that information. The only one that can change it is the financial aid director at the colleges that you submitted the FAFSA to. Don't call FAFSA. They're going to tell you to call the school.
And then you actually have to call each school.
Yep. And sometimes you call the school and they're going to tell you to call FAFSA. And then you say, I'd like to speak to your supervisor, please.
And you might have mentioned this, but let's just reiterate it. Somebody's asking, does the student have access to the financial information that the parent inputs into the FAFSA?
Yes. It's their FAFSA. I can tell you the majority of them are not going to log in though. You know?
Okay, okay, just to confirm, what if there is only, a single mother who's filling out the FAFSA? And what parent, needs to get a parent ID?
If it's just a single mom, it's the single mom.
Okay, I know. I'm just reiterating. Sorry?
Am I missing something?
No, but there were just a few people that were confused about that. So,
right. So in a situation like that, you're a single parent and your ex has got nothing to do with the family, doesn't pay any child support, haven't seen him for years and years. It's going to be the single parent. that the student lives with that is going to be filing the FAFSA. If you have an ex that we're, seeing the child every other weekend and such, you want to make sure that, especially if one parent has considerably less income and assets than the other, you make sure, as long as it's not to the detriment of the child, that they spend more than 51% of the year with that parent in order to legally be able to file the FAFSA.
Again, just to reiterate, because there are several questions about this, about 529 accounts. And if, let's say, for example, I have 3 kids, I have 3 separate 529s for them. I am, I'm the parent on the 529 account, but, I have a different account for each of my kids. When it comes time for FAFSA, what does FAFSA, how does FAFSA consider those assets?
The combined total.
And again, this is something you may or may not agree with, but the theory is that, as Luanne is saying, that the 529 is actually the parent account. It's the student that's the beneficiary.
Right.
Somebody's asking, I've already used DART, but I haven't submitted it yet. Can I go back and do it manually?
If you used it, you submitted.
So they don't realize that. Yeah.
Yeah, unfortunately. And, don't get me wrong. If you use the DRT, you filed, you submitted, and your EFC is, it's kind of normal. It's higher than what you would have expected. If it's not off the charts, if you didn't have a rollover, unemployment compensation, kind of squirrely changes to your income, you should be okay. You're just not going to like the number.
So if you are filling out FAFSA for 2 students, is there a way when you have to fill out the second student, will it pull in the parent information automatically again, or you have to re-enter it?
So I didn't see that this year. Usually you get to the end screen and it says, oh, it looks like you've got an extra child. Although the example that I put in did not have a second student. So I'm hoping that hasn't changed. So you'll get, before you hit submit, it should say, it looks like you have another FAFSA to complete. Would you like to transfer this information? So it's going to transfer all of the parent information over. And so then you're just going to put the student's information, the new student. But you're still going to have to do the DRT again if you used the DRT.
So here's a good question, and we didn't really address it. And that is, the question says, do debts cancel out assets?
No.
So there's actually, unfortunately, no information, no place that the government doesn't want to know about your debts.
They really don't care. The only time that comes into play is with your, if you've got a rental real estate, you take your mortgage and, you can subtract that to get to the equity. But remember, the equity from your primary residence does not get assessed on the FAFSA. But no, there is nowhere on the FAFSA that it asks about your debt or where you live or any, because you live in a high income area. But on the CSS profile, if you have substantial debt because of medical expenses or something out of the ordinary, home was ruined in a storm or such, they'll take some of those things into consideration. But if you've got credit card debt, they don't care. It's just, that was your choice.
There were a few questions about somebody is purchasing a car, so they have a lot of extra money sitting in their account. Somebody just sold their house and they're about to, they're renting for a little while and then they're going to reuse the assets to buy another house. But in the meantime, this money, which is, more than normal, is sitting in their accounts and they're going to have to file FAFSA. What's your advice?
So, you can either wait to file the FAFSA. You can realize that it's only going to be assessed at 5.64%. So let's just say that, okay, I sold my house. I can't find another one because the market is too high. You're probably not going to qualify for any financial need anyways. So just put it into perspective. So if you're not going to qualify for financial need, you can hold off on filing your FAFSA if you feel that you're going to purchase that home and get that money out of your account or purchase that car. You can hold off for a little bit. I would call the schools that your student is considering and find out, do I have to file the FAFSA in order for my student to be eligible for any merit scholarships? And once again, call more than once. And if they say no, then, if you're planning to use the FAFSA because you want your kids to have student loans, or you're going to use the Parent Plus loans, then you can wait to file until June. It's not going to make a difference because you're not going to qualify for any financial need based aid. None of this is cookie cutter. Everything is just depends. But if you've got $100,000 sitting there from the sale of a house, that's 5.65%. So $5,600 is getting added to your asset balance to be assessed.
Here's another question about 529s. I think we once looked into this, but basically this person is saying that the grandparents really funded the 529s, but the 529s were in the parents' names. Is there any way of putting the 529s back into the grandparents' names?
You can, but if you're planning on using that money to pay for college, you're better off keeping it in your name this year than switching it back to the grandparents' name. Now, when the FAFSA Simplification Act happens, and we don't know if it's going to happen next year or 25, then grandparent contributions or contributions coming from outside of the family are not going to get assessed like they are now. If you, this year, if you switch that 529 back to the grandparent, and let's just say you take out $30,000 from that 529 to pay for college, it's going to show up on the following year's tax return as income, or I'm not on the tax return, I'm sorry, on the student's FAFSA as income. And a student's income is assessed over the income protection allowance, which is 7,000 something. Then anything above that is assessed at 50 cents on the dollar. So once again, it's all timing. So right now, you're better off keeping it in the parent's name, and it's 5.64%. We'll see what's going to happen next year on whether it's going to make sense to transfer it back to the grandparents.
What about marital status? Do you consider your marital status as of today, or when you're filling out the FAFSA, or what it was in 2021, the tax year?
No, it's as of today. which really stinks. Because
So it becomes more complicated if you were married in 2021, but now you're either like separated and living separately or divorced.
No. Well, what's beneficial is, okay, if you were married in 2021, but you're divorced now, then you can file separating.
Right, you have to just separate out the tax information.
Right, but if you remarried, then you're going to have to add your new spouse's income from that year, which is crazy.
I mean, it's a whole nother discussion, but I hate to say it's probably just not good to get married around or remarried around the college years. Just hold off, but you know,
You can hold off, dude.
yeah, it's really beneficial. Okay, so a lot of questions just about the tactics of filing FAFSA and whether or not the student has their full college list together yet. So can people file FAFSA even though their student doesn't know all the colleges they're going to be applying to?
Oh, sure. I mean, you can have a couple of colleges on there, hit submit, you're going to get your EFC. They decide, okay, 2 weeks later, I want to put these 3 colleges on there. You just have to go back in and add those schools. And just realize that if you don't delete the other schools, they're going to get the FAFSA again.
Right. Let's see. Just again to clarify for people, if you start the application, if you start FAFSA and you don't finish it, can you save what you've done to that point and come back?
Yes. Yeah, every page gives you the ability to save. And it's saying that it's, saves automatically. But if you have to log out, it'll say, are you sure you want to log out? Make sure you save. I always save twice. I just don't trust technology all that much. And then, but make sure that you know what the save key is. Because if you don't, then you have to contact FAFSA and try to work that out.
So there are a few questions kind of related to the asset and the debt and kind of using the money that you might have in the account. A few questions. So, but would you, if you can, if you had the assets and you had some debts, whether it was credit card or whether it was even your mortgage, would you use the assets to pay down those debts to lower what's in the account when it's time to report information for FAFSA?
It depends on your situation. Are you going to need some of that asset to help pay for college? Because a lot of people, if you've got the extra money to pay off your debt, you probably would have paid it off already. So to pay off your debt, to reduce your EFC, it's not going to reduce that much because it's your income that drives the EFC. It's not so much the assets. So unless you've got over $500,000 of debt that you're going to clear up, it just, you have to, don't cut yourself short with cash flow thinking that it's going to reduce your EFC, because it's not going to reduce it. Hardly anything that's going to make a difference.
Okay.
Because you're going to have a lot of extra expenses getting your kid off to college that is not on the balance sheet coming from the college.
Good question. What is the deadline for filing FAFSA?
So as far as FAFSA is concerned, it's like a year away. but
like June. It's like June,
of
the
the
end of
following
June
year.
of the following year.
So if you file the FAFSA right now for 23, 24, the deadline for FAFSA is June 30th of 25. But every school is going to have their own deadline. So some schools are going to say, not only do we want your early action or your early decision application, but we want all of your financial applications in by a certain time to, be awarded merit or for consideration or such. So you have to look at every school and what their deadline is. Don't pay attention to the FAFSA deadline. That's almost 2 years away.
What about for those parents that have their own student loans that they're still dealing with? Does that in any way come into the process for their students' FAFSA?
No, it has nothing to do with FAFSA. It will be a question that's asked on the CSS profile, and they might take it into consideration with their calculations, but not for FAFSA.
Okay, so maybe we kind of started this, and so maybe we'll end with this because there were a lot of questions. So somebody's saying there were a lot of questions about signing in as a student with your FSA ID or signing in as a parent. Can you please just go over it again as to, who gets the IDs, who signs in, who fills it out, who signs it, and who approves it.
Okay. According to FAFSA, the student has an FSA ID, the parent has an FSA ID. You can log in as the student, as the parent, or somebody that's helping the student. FAFSA says the student should log in as themselves, create, their information, sign out. Then the parent should sign in as the parent, complete their information, and sign out. And by sign out, I mean, you have to have both people that are ready to submit the FAFSA. In my mind, I think that is asking for a lot of trouble. And I've had families that have contacted me because they've done that and have, it's been major mistakes. So my suggestion is you sit down with your student together and have them log in as the student, and the two of you make sure that everything gets submitted correctly. Then the student files, hits submit because you logged in with his FSA ID or hers. And then it's going to ask which parent is going to sign. And you just click on the thing, you put your FSA ID, username and password there, hit submit, and then it comes up with the page that says, congratulations, with the name of the child. Do not close out of that until you see what your EFC is, because it's going to be on that page. I recommend that you save it because you're never going to see it again. It's going to come to your student 3 to 5 days later in the form of the SAR, the student aid report. They're not going to check their email, or if they do, they're just not going to pay much attention to it. And in most cases. So that's my recommendation. And that's what I do with all of my clients.
Okay, well, thank you, Luanne, for your time, for your knowledge. We may not have answered every question, but I think we got through a lot. And as you recommended earlier, people can rewatch the recording. They could slow it down and to help them go through it again. and they can, put questions in the Facebook group. Luanne, answers some of the questions in the Facebook group. There are a lot of knowledgeable parents and professionals as well. And hopefully this was helpful. And, you shouldn't be crazed about getting it done, but, I wouldn't hold off too. I guess, Luanne, you didn't give one last piece of advice. When would you recommend, like, kind of, if students are applying early decision, let's say, because a lot of those deadlines are coming up soon, when would be a recommended time for people to start to have FAFSA filled out?
So I usually do the FAFSAs and the CSS profile, probably the last week in October, first week in November. Unless you've got, once again, look at the deadlines of the schools that you're applying to. And if anybody has a earlier deadline, there's a couple of schools that have an October 15th deadline for either early action or early decision, but usually, their financial aid forms still are not going to be ready.
They usually give you like 2 weeks after the
2 weeks.
The application, your student's application deadline. Yeah, 2 weeks or a month. Yeah.
So, and I see how do I know if my schools are accepting a CSS profile? You can go to the College Board website and look at or you can just put into Google CSS profile schools for 23-24, and it will bring up the list on the College Board for the schools that use the CSS profile.
Okay. Well, thanks, Luanne. And thank you, everybody who showed up tonight, and good luck. Okay.
Take care, everyone. Good luck to you. Debbie, I'm just now starting to lose my voice.
I know, so it's a time to finish.
I'm going to finish my tea and honey.
Enjoy.
Right.
Okay.
Take care, everybody.
Good night.